The cost of doing business continues to rise. Few businesses can afford to offer more employer-paid benefits. How can group insurance be improved without increasing the premium? Here with us today is Tony Palanza of Combined Services. And Tony's been with Combined Services for over 30 years. He has endeavored to educate himself on employee benefits and has obtained 10 different insurance designations along the way. Tony, with your experience in the insurance industry, what advice can you share with brokers on how they can help their clients improve their disability benefits without increasing the cost?
Well, Jack, first of all, thanks for having me on your show. And yes, there's many things employers can do, but what employers typically will do on the short-term disability and long-term disability side is oftentimes they pay for that benefit on behalf of the employee, and that's a great benefit. And generally, these employees' plans cover about 60% of their salary. If the employee does go out on claim, though, you can kind of figure it out. They suffer about a 40% income loss kind of when they need it the most, when they're out on disability. And oftentimes, their expenses don't go down, they go up. So if the employer can include the disability premium to the employee as income, and then if the employee goes out on claim, the benefit is not taxable. The 60% income replacement, because it's now post-tax, represents more like an 80 to 85% after-tax income replacement. And the cost to the employer is really only the Social Security tax that they would pay on the premium cost.
That's interesting. So that makes the employee's loss of income go from 40 to 20%, just including the disability premium as income.
That's right, Jack. So if you kind of do the math that the employee was paying, or the employer was paying $30 a month for the disability coverage, and therefore then the employee would then be paying that $30 a month because they would increase the salary by that amount. The net cost to the employer would really only be the Social Security tax of about $2.30 a month. The employee would have to pay taxes on the premium, but that's far better than paying tax on the benefit when they really need it the most. So what would happen then is you'd get that old adage of paying tax on the seed and not the harvest, which is really what you want to do from a tax standpoint.
So, Tony, it seems simple and clear enough. Encourage employers to include the disability premium as income so it is taxed when the employee doesn't need the income, not when they do need it.
Yeah, that's exactly correct. And the concept applies just as well to voluntary insurance disability coverage. Voluntary meaning that the employee is bearing the full cost of the premium. And we see that a lot nowadays. The employer is not paying part of the premium, but they're offering the plans out and the employees pick them up. Again, the employee should always pay short-term disability on a post-tax basis. But the employee would not pay tax then, same way as before, on the benefit when they need it the most at the point of claim.
So the same concept of paying taxes on the premium so that the employee doesn't have to pay taxes on the benefit.
Yes. However, paying pre-tax on other benefits like health insurance can be a big advantage, or dental insurance, or a host of other employee benefits, both for the employer and the employee. These pre-tax plans are known as Section 125 plans, and that's the Internal Revenue Code section that allows the employer to convert employee contributions from post-tax to pre-tax. Knowing which plans to pre-tax and which ones not to pre-tax is a big advantage to the employee and really can help the employee stretch their premium dollar. And make sure that the employer's Section 125 plan is up to date and includes all the provisions in it and the plans in it that it needs. I've reviewed a lot of Section 125 plans and found out that the plans are really not in sync with what the employer is doing. The document needs to line up with the way the employer is running their employee benefits and the plans that they've included in the Section 125 plan.
Well, great information, straightforward, Tony, understandable, appreciate it very much. If brokers have questions on which plans that are more advantageous or anything we discuss, can they get in touch with you directly? How can they best get in contact with you?
Yes, they can contact me directly. And my email address is apalanza@combinedservices.com. That's APALANZA @combinedservices.com. Thanks very much.
Thank you very much, Tony. Good to be with you.
Thank you.